Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the E-mini, and what we're seeing here is you saw a breakout on Friday, potentially a break above that closed above the daily middle Bollinger Band, the 20-day simple moving average. What we are seeing in Globex is you're seeing some resistance at this week's monthly pivot in the 25-26 area, and you're seeing it push back towards the daily pivot today, which is about 13.5, and then at the same time, you've got the middle band coming in at 19.10.75. So you've got this little battle here. Here's the monthly pivot. You got the 33 high from Friday. They did a lower high right off the bat, and then they tried to take it back up, down, and then what you've seen here is fairly steady, lower highs, lower lows. They're trying to make a higher high here versus the daily pivot. That's pretty much the bulls, best look if they can get it back over, the 20 area to go back and take a look at the monthly pivot. But as long as the monthly pivot stays resistance, the bulls are going to have big problems. Don't forget, back in January, what happened on the first trading day of January, January the 4th? Made a high at 2043.5 that broke below the monthly pivot for January, which was in the 2040 area. When that broke and sealed, okay, as resistance, it was see you later bulls. So you've got to respect and you've got to be patient with what does the monthly pivot want to do for February. Is it a situation where we're going to go ahead and test the daily middle band, bounce, hop back over the monthly pivot and go? Because that's very possible. Look, the bears can still be in control of this tape, and we can go all the way up to the purple line here at the 200-day exponential moving average. As long as that's resistance, the bears are fine. Don't lose sight of that. Bear market rallies and rips happen. I mean, we've been in a bear trend. If this is truly going to become a overall bear market, you're going to get these rips and they're going to fail to lower lows. Taking this up, 100 plus, 150 plus handles, only to go down and break 1804 quarter would put us pretty squarely in a bear market. I mean, if you want to get the true, whatever it is they talk about on CNBC about, if you open up the textbook and what is a bear market, that's the road to get there. If you're a bear, you got to go up to go down. Okay. And you've been doing that, but you've got to follow through. You've got to defend the key areas. You didn't defend this key area, the green line on Friday. You didn't defend that at all. You fell on your face. What you're trying to do now is defend this key area, the monthly pivot. If you can hold that, break back below the green line, then what we have here is another rally sell. And we don't see really what the full effect of that rally sell is going to be until we get back down here in the area of the 9-day. Right around 1886. So there's a lot of questions this morning. There's a lot open for discussion. And my suggestion and what I've been telling our folks is, look, you've got to let this play out. Right now we're short against that monthly pivot because we've seen some lower highs during the course of the night. But, we're certainly not committed. We're not going to commit until the market decides to commit. And I'm not going to really commit to a full-blown sell rallies environment until we can break the green line. Anybody who's followed me for any period of time knows when we're above the mid-band, it's a buy the dips environment. When we're below the mid-band, it's a sell rallies environment. We come back down to the 13s, to 1910s, and we hold, I'm a dip buyer there. And if that happens this morning, in that little, buy that dip time of day, we'll be all over it on the long side until we're proven wrong, until the middle band gets converted. So have an open mind. I think February is going to be a lot more difficult to trade than January. I think it's already showing itself as that. So, use smart size, be aware of your risk. Don't try to trade February like January. You've got to take what the tape gives you this month, I think. It's going to be a lot tougher. I think the ranges are going to be smaller. I think the rallies are going to be more violent. It's going to be harder to catch. I think we're going to get whipped around a lot this month. So we'll see how that plays out. All right. Everybody have a great day. Follow us at Twitter, at Princeton Trader. check out the website, princeandtrader.com. Come check out the chat room. First of the month, great time to come take a trial. Would love to meet you. I'll be back tomorrow morning with another webcast. Trade 'em well.